So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey everyone, this is Kirk here again from Option Alpha, and welcome back to The Daily Call. Today we're going to be answering the question, what is historical volatility? So historical volatility is simply the volatility that has happened historically in the past for a particular security at any given time or during any given time period. Now, most people actually honestly still confuse this with implied volatility, but implied volatility is forward-looking. Implied volatility looks at the possible or projected or expected volatility that a stock might exhibit moving forward into the future. Historical volatility is easy to figure out. We know historically that Apple might have been volatile with a 20% up or down move in any given time period. That's something that we can look at retroactively or retrospectively and figure out what the historical volatility is of Apple. Now, the reality is that historical volatility has sometimes very little to do with what their projection of future implied volatility could be. We could see a dramatic shift in a company and they go from a low volatility company to a much more high volatility company, or vice versa. We could see a company go from high volatility to an extended period of low volatility. But again, historical volatility is only one metric that we maybe should be looking at or factoring into our analysis when trading options. The good news is that most things that are highly liquid, most ETFs, most highly liquid stocks already factor in historical volatility to its implied volatility projection. And again, implied volatility is more often than not going to be an overstatement of the actual or historical volatility that happens in the future. So it's important to understand the difference between historical volatility, what happened in the past, and implied volatility, what is expected to happen in the future. So hopefully this helps out. As always, if you have any questions, let me know. And until next time, happy trading. Thanks for joining us on The Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on The Daily Call from OptionAlpha.com.